Hello, I'm Ted Hansson, the interim CEO of Fingerprint Cards. Thanks for your interest in Fingerprint Cards and your interest in this presentation. In the ongoing refinancing activity that we are running, we have held various investor meetings, and today we are recording the material shown in those meetings to make sure that it's available for everyone. Please note that there is no new or additional information in this presentation. It is entirely based on previously announced and communicated information. I will start by going through the company introduction and some background to the current situation. Fingerprint Cards was founded in 1997. I would say it was founded by a visionary who saw an opportunity to simplify and increase security for payment cards by adding a fingerprint sensors. Now, some 26 years later, we see that this is happening. Before we get into the card, we had a huge success, especially in the mobile phone segment, where we today have shipped more than 1.5 billion sensors. This is, of course, an astonishing number. I don't think there are many companies that can claim that their product has been touched by so many people, especially not companies our size. And we are today shipping to 9 of the world's top 10 smartphone OEMs. We have been integrated in more than 750 consumer devices, smartphone, tablets, and PCs. In addition to the success in the PC and mobile segment, we have taken a clear lead in the emerging biometric payment card market. Today we have participated in 24 pilots, and we are the sole supplier in 10 commercial bank launches. We are also active in the access side. Historically, we have been strong in the Chinese door lock market, where we have had a high market share for many years. The last couple of years, we can see an increasing interest and also business for both logical and physical access products outside China, especially in North America and in Europe. We are very excited about the opportunity we see in the logical and physical access market, and I will get back to that in the next few slides. In addition to fingerprint sensors, we also have a world-class iris solution. Up until now, the main focus has been the automotive market, where we have a very strong partner, Gentex, who is world leader in smart rearview mirrors. We see there is a great opportunity ahead with DMS, driver monitoring system, becoming mandatory, both in North America and in Europe. In essence, it means there will be an IR camera in the car that will capture the face of the driver, and we see there is an opportunity for us to add identification without changing the hardware. We believe this is a very strong offering that we are pursuing now. Fingerprint Cards has roughly 250 people. Half of the staff is in Scandinavia and half of the staff is in Asia. Particularly in mainland China, we have strong presence. There are many biometric technologies or modalities, and we have chosen to focus on modalities where we see both that there is enough security as well as a possibility to scale to mass market products. So we are focusing on fingerprints, where we have had capacity fingerprint sensors for many years. And in the end of last year, we also launched the first optical under-display product in the mobile phone segment. In addition to the fingerprint sensors, as I said before, we're working with iris and also a combination of face and iris. So we are focusing on the modalities where we see security that will allow payments, that will allow you to protect your privacy, your personal data, and so on, as well as a possibility to scale to high volume. The first product group is the mobile phone segment. This is, of course, our largest segment, and it's an established segment. We have been a leader in capacity fingerprint sensing for many years. And as I said, in the end of last year, we launched the first optical under-display product with our customer. And today we are working really hard to scale and to win market share with our optical under-display products. The value of the capacitive and optical under-display segments in the mobile phone area is roughly the same. So in essence, we double the addressable market by entering also the under-display segment. The next segment is PC. We saw a record revenue in Q2 2023. This is the result of the hard work that we've been putting in the last 3 years. We are winning market share with our customers. We are entering new segments within customers, and we are also winning new customers. You saw the global PC shipments going down quite a lot due to both the COVID and the global economy. Despite that, as I said, we recorded a record revenue in Q2 for PC. The next segment is payments. First, I want to say that we are of course not happy about how slow this market has been up until now. However, we are positive and confident that the market will happen. We continue to see large, significant investments from Tier 1 card manufacturers, from Tier 2 card manufacturers, from secure element providers, as well as other ecosystem players. We believe this is a strong evidence that the market is going to happen, and we are of course doing everything we can to make sure that it takes off as fast as possible. We are fully ready to scale this business and ship large volume. The access business, as I said, we have traditionally been strong in the door lock market in China, but there is a lot of interest now outside China, both for logical and physical access products, and it's a really interesting growth opportunity for us. And I will get back to that as well in the coming slides. In addition to these segments, we have been working on other diversification activities that we now have consolidated to make sure we have the right focus and the right follow-up, and to make sure that this really happens to the largest extent possible. So we have created a new segment that we call New Business. There are 3 pillars in this segment. The first one is partners. We are sitting on a very, very strong sales channel. We are selling to 9 out of the top 10 mobile phone OEMs. We are selling to 6 of the top 10 PC OEMs. We are selling to all the major card manufacturers, and we also have relationship with many other global large companies, and this is something that we would like to take opportunity of together with our high volume experience, and we are looking into, together with partners, create new, interesting, exciting offering for our existing customers through partnership programs. The second part is IP monetization. We have more than 500 granted patents, and many of them are early, very strong patents for biometrics for fingerprint sensing. And we believe there is an opportunity to monetize them, and we are now pursuing that together with strong partners. The final part here is the automotive. I already mentioned that we are looking into the DMS, the driver monitoring system. We believe there is a great opportunity here for us to add identification without increasing the hardware for the car manufacturer. And we are pursuing that within the New Business segment. I'm sure you all follow our share price and also our financial results. And recently we have had a quite negative trend, and I would like to go through a little bit how we ended up here. We have to go back to before COVID. In 2020, 2021, there was actually a global chip shortage. We could not meet all the customer demand. And we, as well as everyone else in the industry, and this is not related only to fingerprint sensors, it's all kinds of semiconductors, cameras, displays, memories, whatever. We all invested to increase our production capacity by utilizing more foundries and more factories. And when that started to pay off, we start to see that the supply increased. We had COVID hitting us. And as a result of COVID, we saw a rapid decrease in demand. This meant that we, as well as all our competitors, and this is the same for all components going into smartphones, built inventories. Of course, when inventories are built, everybody wants to convert their inventory to cash. That led to a strong price competition. We saw Q1 of 2023 as the bottom, with high price competition and very low demand. And as we have previously said, we saw that Q2 we managed to increase the revenue. we actually saw more than 100% growth in the mobile segment. And this means that the demand is back. We also show this slide where you can see the order stock development this year, week by week. You can see that the first few weeks of this year, the order stock was very low, and after that we have seen a steady increase, and the order stock keeps increasing even though we are shipping. And today, as I have said before, we are shipping, all our mobile phone OEMs are buying, all the distributors are buying, all the module houses are buying, the channel is moving, and we are seeing orders every week from all the customers. Right now, as you know, mobile phone volumes globally are down compared to the last 2 years, and we are running at a lower run rate than what we had a couple of years ago. But I am 100% confident, as well as most other people, that the mobile phone market will recover and we will go back to the historical levels we have been at before. We're still shipping to all the customers we had before COVID, and we are doing everything we can to defend our market share. But right now, as I have said many times, it is a tough situation where there's a lot of inventory cleaning going on, and that leads to price erosion. In the second quarter, as I said, we saw a very nice growth in the PC segment, and in the payment segment, it was slightly down, kind of flattish. I think that this does not represent where the payment market is going. The volumes are still so low that one PO inside or outside a quarter will have a significant effect on the quarterly revenue. Over time, as I said before, we remain positive that payment is going to scale. It is happening, and there will be significant business and volume coming from there. The access business, the second quarter this year, it was a disappointment. We have won many new customers and exciting products, especially outside China, as I said before. These customers are either introducing new products or adding Fingerprint or Biometrics for the first time. And of course, the visibility of the forecast is lower when it's a new business. And what we saw in the second quarter does not represent the positive view that we have and the pipeline that we have in the access business. I'm confident that we will show growth going forward in the access business, and we will see better numbers going forward. If you look at the situation right now, what is happening, we can see that the demand, especially in the mobile phone segment, is back. We see a stable demand. However, it is still at a lower level than what it was before the COVID happened a couple of years ago. We see a strong price pressure. There is a lot of margin pressure. I believe that this is going to go back to a more balanced situation when inventory is depleted. Fingerprint sensors are not the first component going into mobile phone that have had this situation. There's a lot of suppliers, there's inventory that typically leads to consolidation. And we can see now that in some of the RFQs that we are participating in, there are fewer competitors invited. I see this as a first positive sign that there will be consolidation in this market. And as I said, once consolidation happens, there will be a better balance between COGS, cost of goods sold, and the average selling price. Talking about the cost, we have previously announced cost-saving activities. This is, of course, something that we are continuously looking into, and we have to do everything we can to get back to profitability. Now we have a new CEO coming on board on September 1st, Adam Philpott, and this is, of course, also high on the agenda for Adam to look through the cost structure and make sure that we return to profitability as soon as possible. In the second quarter, we generate positive cash flow, and that was to some extent because we were largely selling from inventory. However, that inventory was bought when the foundry prices were significantly higher than what they are today. as time goes by, and I've said it previously, we expect to reach a normal inventory level in the fourth quarter. When that happens, the rate of new wafers that we use for our products will increase, and we will have a lower cost structure, and we believe this will help to improve the margin over time. However, as I said before, there will be significant price pressure in the mobile phone segments until all the competitors have cleaned their inventories. And then looking at our diversification, I already went through that. We are looking into partners, we're looking into using our IP to monetize that, and we are doing everything we can to accelerate the growth and diversify and reduce the dependency that we have on the mobile phone segment that have had impacted our business and our financial results so much in the last several quarters. If you look at the mobile phone segment, if you look at the situation today in the market, there are many suppliers and there's still a lot of inventory. We are defending our market share, we are defending our position, but it comes with lower margin. As I said, we see the first signs of consolidation, and now we're doing everything we can to make this a profitable business and sustain until the market consolidation happens. When that has happened, I expect, just like with other components, that we will reach a better balance between our purchase price and the selling price to customers. We see that the foundry prices have fallen, very similar to how our products ASPs have fallen the last few quarters, and the new silicon that we are getting now or buying now comes at a much significantly lower price. We will continue looking at efficiency, continue looking at saving cost, and make sure that we run the mobile in a profitable way. I think I already covered the rest of this bullet points here. So let's move to the next segment. PC segment. So as I said, PC segment is, compared to the mobile phone segment, more traditional, more conservative business. It takes longer time. First you need to qualify, then you can get an RFQ. If you win RFQ, you will get a small market share, and then you need to prove yourself, and then you can increase your market share, and you have a chance to be in RFQs for other segments. So no matter how well you perform, it takes several years to get significant market share from one of the leading PC manufacturers. We are well on the way with this. We are executing well. We are getting very positive feedback from our customers. We are gaining market share. You saw the Q2 result is significantly up, and that is despite the PC volumes going down globally. So clearly we are winning market share. In addition to that, we believe that we are sitting on a really good system solution now with our in-house MCU that is sampling with the first customers that we also announced in the Q2 result. This solution will allow us to improve both the current consumption but also the matching time and security. And we of course see an opportunity to also use this system solution in the access segments that will allow our logical and physical access customers to easily integrate and add biometrics to their products. Very exciting opportunity. Over time, we see that PC will bounce back to historical levels, and talking to the OEMs, talking to Microsoft, there is a very strong desire, there is a strong intent to increase the attach rate of fingerprint sensors going forward. So we believe that the market will continue to grow, and we have an ambition of becoming the world leader in this segment, and I think right now we are tracking well towards that target. And we expect to see continued growing business here in the PC. Finally, I want to talk about the payment and access. In the payment side, even though the takeoff and scaling of this business is slower than what we and of course many of our peers would like to see, we do continue to see significant investments. And this means that there is confidence that this market is happening. And there has already been 10 launches with us, and we have taken the majority of the global volume. So we intend to defend our strong position here. And in addition to having a solution that works well with the tier 1 card manufacturers, we also announced some time ago that we have now launched a turnkey solution with Infineon for what we call tier 2 card manufacturers. So with Infineon, we have created a SIP, a system in package solution, basically a component that consists of both the secure element and the fingerprint sensor that smaller card manufacturers can use in existing production equipment, existing production lines. So this will allow the smaller card manufacturers to produce high quality, cost competitive biometric payment cards from now on. And we see that many of the banks that want to launch early are smaller banks, it's challengers, it's different fintechs, and they typically use this smaller type of card manufacturers that have not been able to provide good solution until now. In addition to Infineon, we have also communicated about collaborating with ST, who is another large secure element manufacturer. So we are very positive about this launch. We believe this will help to see more launches going forward, and we believe this will help to create the market takeoff. If you look at the access side, there's a significant growth in the adaptation outside China, especially in North America and in Europe. We announced that we have received the first firm purchase order for access product from a non-Asian customer with a value exceeding $1 million. So this is clear evidence that there is volume, there is scale, significant business to get also outside the Chinese door lock market. Personally, I believe that there are many verticals that we should explore, that we are exploring, where there's great opportunity, where it makes a lot of sense for fingerprint sensor and biometrics to be. One of them, as I've spoken about before, is the remote control. Today we see that companies such as Netflix are paying TV OEMs to have a Netflix button on the TV. I think it makes perfect sense that this button is a fingerprint sensor. When you press the button, it will know who you are, it will know what program you are, what profile it should load. It will make sure that children cannot use the TV when they're not supposed to. It will protect them from buying content, it will protect them from adult content, and so on and so on. There is a clear benefit of adding biometrics to remote controls, and we are of course pursuing this now with everyone in this ecosystem. There are also other interesting verticals where I believe there is high potential. Not long time ago, Apple announced that their first headset will be launched and it will have iris recognition. So I think there is a strong message here, and we are of course using this in discussions with AR and VR headset manufacturers to add biometrics, add iris recognition, and get identification in that product as well. There are many other examples of access, which is a very fragmented market and a lot of growth opportunity for us to go for going forward. So that was the presentation I wanted to share with you. And before we end, I would like to take the opportunity to welcome Adam Philpott, who will join on September 1st as the CEO. So with that, thanks to everyone and thanks for your interest in fingerprint cards. Thank you and goodbye.